As we talk about these market stories, is it shocking to you the type of steep declines that we're seeing, not just in oil, but in the markets overall?
I think it is a little neck snapping, Dom. At the end of the day, let's look at the week we had last week. It was the best weekly gain in the S&P 500 we had in nearly 7 years. Take that and reverse it all in 3 trading sessions. So now here we are, open about on the futures behind me about 2% lower after a pretty tough Monday. Look at that close going into Tuesday. Tuesday alone in the S&P 500 was down 3.5%. We always talk about what is the actual fear on the street. And a lot of people can say, well, hey, the VIX is just in its 20s. There's not a lot of fear out there. But let's talk about realized volatility and implied volatility. You're well aware that these realized volatility, these moves that we actually incur, on Tuesday, that was a 3.5% move down. That translated into a 52 on the VIX. We're seeing the VIX this morning just go above 25. So a lot of people can look through the lens that, yes, it's going to be okay, but a lot of people could also argue the fact that there's a lot of complacency out in the market as we see a lot of red across the broader indices again this morning.
So Jeff, let's put that in perspective then. As we talk about the volatility picture, we were at...
Yes.
Possibly at much higher levels in overall stock market volatility during other points just in October and certainly back in February and March. So what exactly is that telling you about the current situation? Is this a panic-driven sell-off? Is this something that we should be fearing, or are there buying opportunities that could emerge because of this, what some would call maybe an orderly sell-off in the marketplace?
No, and you're absolutely right, Dom. In my perspective, that this is quite orderly. We are seeing a very different VIX level, but it's very hard to gauge and measure the VIX. And some people are even saying it's a little bit of an antiquated measurement. It is measuring the option premium that people are willing to pay to protect portfolios. But at the end of the day, the suppressed volatility environment for the last 10 years has really misled a lot of investors on what actually is the proper price. But what I see is an opportunity here. As you see momentum, there's so much emotion being driven. And let's look at what the Trump administration did going into that G20 meeting. We saw a lot of optimism. We also saw Powell come and have a little bit more dovish tilt to the portfolio. So then we saw that 5% gain last week in the S&P 500. Now you're just seeing that wind come out of the sail. And I think that provides a big opportunity here as we see the S&P 500 level at 2650. This is oversold, folks. And that's why I like to look at certain sectors. If you missed that tech ride in 2017 as well as 2018, it's an opportunity to get into some tech. But we also like some of the specific sectors. I think it's really critical, Dom, going into 2019 to have the proper exposure, have that sector tilt on to really find a way to kind of dance between the raindrops, because there will be more volatility.